G'day traders, Free Cash Friday. Just had a fantastic workout. Great way to unwind after trading session. Today we're talking about the high and low of the day. Now Free Cash Friday, or any day for that matter, we talk about timings, levels, behavior of price, and often I get asked about other sessions, other setups in terms of how would you trade London or how would you trade Asia. Every session that I trade would be the same. You're talking about looking for either a continuation trade, a trend trade. So you would, if for example, if you're going long, you are looking for higher highs and a dump to position yourself in the pump and the continuation for low-hanging fruit. And the same would apply for a short trade, a market to break down, traps first, mice short. We're looking for the pump and then the continuation for the dump if our thesis is a continuation in that session. We know when those boundaries are broken from a previous day's high and low that we now have other time frame traders entering into the market, into potential other existing other time frame traders driving a move. So often what happens is traders are caught counter trending a market when it breaks a boundary, and then the market may give them an engulfment. They're buying high in that low of day move before the market consolidates and drops through their entry position for a continuation trade of low-hanging fruit, which is why we talk about shortened W's, lengthened W's, shortened M's, lengthened M's as a second peak formation. So the market makes a high, trades back into the high for a short trade in the timing window, or it makes a low and it trades back into that low for a reversal trade setup. So often when traders get caught on that first entry, which forms a peak formation, that is the low being put in place, and then the market continues to go lower, low-hanging fruit, or the market puts a high in place, pulls back in that first hour for the pump, continues to go higher, which comes back to the US session. So often, especially on a Friday, end of the week, closing range for the week. So we talked about Monday's day one, Tuesday's day two, Wednesday's day three. I reset that. That becomes we now have a high and a low of the week in place. So we could have lower highs, lower lows on a daily chart, but we still have a high and a low heading into our closing range of the week, or a higher high, higher low. But Wednesday forms our range. If it's an inside day, we still have our extremes in place for the high and low of the week. Now, when we get to the US session, we have three sessions: Asia, London, New York. Asia and London could be inside. Asia could be inside of two London peak formations, or a US peak formation and a London peak formation, whatever that is. We could have Asia peak formation, as we saw in the yen crosses today. And so what's important to understand is when a market moves three levels and they've broken those levels, to mark off your peak formations and have a thesis in place in terms of that template. Are they still on the front side of a move? Are they dumping for the pump? Are they pumping for the dump? Have we broken any weekly levels? So the high and the low are where you will have your least amount of risk if you are in the timing window. So often traders wait and they get in later trying to sell the high, or later trying to buy the low, and they're counter trending a market that is still on the front side of that move, whether that's for the day itself or over the course of day one, day two, day three. We'll talk about this in the charts. I've had an extremely hectic month with visitors and traveling and kids on school holidays and back to school. So I endeavor to finish some of the existing videos which will clarify some of this information. But the most important thing is sitting on your hands and waiting. You know, I still have some traders who are getting frustrated and beat up, and I have to question some of their trading because, you know, an excellent question about scaling in. We'll talk about this again. I've gone over this in previous videos, but I will talk about this again. Scaling in allows you to put your foot in the water, put your toes in the water, and watching how price behaves. So for example, you could be a full size for, let's say you have a session trade, you're going to take 25 to 30% of your max loss on that particular trade. So I talk about full size being a 5-star 3-day high of week, low of week opportunity, or could even be a 3-day coil, could be a 3-session coil where we have all time frames aligned. But when you scale into a trade, no major red news on the calendar, we have the opportunity now, as price confirms, to accelerate adding in. What that means is this. So the first starter, what that means is I have a 20 pip max stop loss on that trade. 20, 25 depending on the volatility. Typically 25 will be a max, because again, understand if I'm getting in at a level, if it's, say for example, a 50, my stop out's at 30, we've already had price confirm what I believe that the low of the day is locked in, I'm going long. I'm going to maybe add in right at the open, or whatever that may entail, or add in as the price may be exploding, is this. If that market drops against me and I am stopped out on that first, if I divide that position into 4 pieces, that first quarter, I virtually am losing 0, next to nothing, because that 1 quarter stop out is minimal. And what that means is that if I'm wrong and it drops down 20, 25 pips, it could be going another 20, 25. Again, most stop hunts are 20 to 25 pips. So for example, if traders went long on 930 on oil today, it proceeded to drop down to the bottom of the 100 pip box, one more level, at the beginning of the New York session. And traders were trying to counter trend when the market wasn't set up to go. So it dropped another 25 pips, stops them out to the next level before consolidating and reversing for, I think, 75 pips, maybe 100. The point is this. When price confirms and you're adding in, you're still able to manage your risk, but you're already showing profits on those other positions. When you scale in slowly, even if the market trades against you, as one trader put it, you're the first mouse maybe, or you get in too early, you're stopped out, you can easily make that back in double when you scale into the move when it goes parabolic, if you understand that. So your first stop out might be 25 pips as a max stop out on a quarter lot or a third lot, but when you get into that trade and it goes 25, 50 pips and you're full size for that setup, you can easily make that back plus profits when you're scaling in and scaling out of a trade. So as I talk about, in an explosive move, I may not have enough time, and I'd be getting in, and as it's exploding through the high or to the low of the day, I will take some off and immediately lock in the others with set profits if it was to fall back. So if it goes 75, I'm going to lock in 50 on the other portions, or peel another one off and let the last one sit and continue to run if I feel that it has the potential for a range expansion. Now there are other markets when it's 3 days, 3 sessions for a potential move that may not come back and go for the entire session or day. I will lock in profits, but I will leave a larger portion for that market to continue to run, especially if it's on a fundamental news release or a catalyst that could potentially continue to drive that move for the rest of the session. So high and low of the day, if you're trading inside, the thesis must be that they have already locked in the high or locked in the low for a parabolic move to the other side. And if you're there before major red news or before the open of New York, you can expect that there is a high probability that that market may be trapping people into the dump first or into the pump first before reversing, which is why I suggest to traders that are still trying to get some consistency and that the runs on the board is to sit and wait and allow the market to set up and pay attention to the time of day and the levels. Has it dumped 3 levels? Has it pumped 3 levels? Has it got to the high or the low of the day? So traders often ask, high and low of the day. Yesterday's high and low, if you're inside, okay, think about this. That is the high and the low. And if you are going to take a trade on the inside, you need to work from the high and the low of the current day. So they could take out the high of the current day and go to the low of yesterday. Now we have other time frame traders either stopped out, triggered into the market, or entering into the market at those levels to drive a move, a potential reversal move, or to drive a continuation move if it's a trend trade, right? Day 1, day 2, day 3. These are all the scenarios you got to be paying attention to. I talked about closing price. I put a bit more emphasis on that lately for traders to have that level in the back of their mind on their setups to know, are you trading into that level? Is that a potential area of resistance or support? When the timing window is there, for example, 9:30, 9:45, 15 minutes false move at the beginning of New York. 9:45 begins the reversal trade. Think about those sorts of scenarios. The high and low of the day, there was free cash laying on the ground. All you had to do was sit on your hands and wait for it to get sprinkled around, walk over, pick it up, and as one trader said, make sure you don't give any of it back. Jump in the truck and speed away and don't come back. So high and low of the day, critical. And if the market is expanding that range in that first hour makes a new high, drops down, gets traders shorting the move before New York opens. Think about that. Maybe the second hour now is going to be putting in a low, working into the low for a reversal, maybe third hour, or at the end of that second hour, which is New York open, trapping traders, and then reversing. 3 hours, 3 days, 3 sessions, 3 levels. It's all the same. It's the same thing every week, and it's either going to be a pump and a dump, or a dump and a pump. And you can get both, as we saw in gold. We saw a pump into the high first hour, a dump, down 3 levels, and then New York open, the reversal all the way back through the high of the day at 25 pips stop hunt, and then the collapse all the way back through the low of the day. So nothing's going to change. It's all the same. There's no voodoo. There's no crystal balls. There's no other BS. It's high and low of the day. High and low of the day. And if you aren't sure, wait till it breaks out of yesterday's high and low, and we'll know whether you're still on the front side for a continuation or if you indeed have a setup. And how do you tell that? 3 levels, 3 sessions, the timings, the levels, and the behavior of price. So 1% better every single day, traders. Congratulations. Many traders nailed it this week. I think several probably padded their accounts with a fairly significant percentage, and all you had to do was wait. We had 9:30 pretty much, except for the 10 a.m. news the other day. We had significant moves, enough for easy free cash, lock and load, take it and run. Don't do anything impulsive or irrational to engage in bad behavior. And the more you do this and you stick to the timing window, it's almost impossible to screw it up. So high and low of the day, the timings, the behavior of price, reversals, and trend trades. Keep it simple, rinse and repeat. It's going to be the same thing next week, traders. So congratulations, have a great weekend, and may the markets go with you.